Okay, hi everyone. Hi everyone. Welcome to our webinar. Can you just let me know in the chat box if you guys can hear me? Hi, you Baraj. Hey Brian. Hey Jessica. Hey Josh. Okay. Okay, I'm glad you guys can hear me. Second thing, I want to check if you guys can see the screen. You guys can see the screen, right? The one that says the opinions expressed in this presentation and on the following slides are solely those of the presenter. Everyone good with the screen and you can hear me? Can I just get some response in the chat box? Anyone? Can anyone hear me? I mean, sorry, not hear me, but like, can you see the screen? Okay, I'm glad you guys can see the screen, and I guess I'm glad you guys can hear me. Okay. Without further ado, let's start our presentation for today. So, as usual, for those who are new here, I see some familiar names like Josh, Jessica, Angie, Kay. Yeah, I see some familiar names and I see some new ones that I'm not particularly familiar with, but that's okay. So those who are here for the first time, as usual, I always start my presentation by expressing how this presentation is for educational purposes only. This is not a signals group. Everything you take here should be taken with a pinch of salt. It's just kind of like ultimately I kind of want to share how I managed to be a profitable trader, and hopefully you guys can take away some things. But yes, please trade at your own risk. Trading margin trading FX or CFDs or whatever it is you're trading comes with a lot of risk, especially trading on margin. So please be cautious when you are trading. Are we all good? Are we all in agreement? If we're all in agreement, can I get some response in the chat box so I know everyone's good? Okay, thank you, Brian. Thank you, Jessica. Thank you, Joash. Okay, thank you. Okay, I'm gonna move on. Okay, so our topic for today is actually trade and risk management. I know on the website it's a different topic. I think it was supposed to be idea invalidation today and break even. But the thing about that topic is that it's a bit more advanced. So we're gonna start with something more like we're gonna start with the beginners kind of presentation first before we slowly make our way to like the more advanced stuff. This way you guys won't be lost. It's easier for you guys to follow, especially for those who are new, and for those who are here like every week, like this can be a good refresher for you guys anyway. So I think this is the first webinar I am taking with you guys for this year. I hope to see you guys every week, because every week we'll be learning something new, which will then eventually bring us to being able how to trade. So everything you learn every week will be combined to like the final end results of getting you guys to be like a good trader, a profitable trader. Okay, so I hope you guys are here every week to, you know, kind of grow with me and learn as we grow. So yeah, all right, to begin, I'm gonna go with our agenda for today. So we're gonna start with meeting the team. Hold on, let me just put this away. This thing is blocking my screen. Okay, there you go. Okay, so we're gonna start with meeting the team, and then we're gonna start with our topic for today, which is anatomy of a trade. So this is the really basic stuff, which is good. Even if you're a pro trader or not, this is good. Like, this is good stuff to go through because it works as a refresher. And for those who are just here for the first time, like, this is a good webinar to start with. So before I continue, I actually want to find out how long have you guys been trading for. I want to know your experiences so that I can go faster or slower, or if I should be repeating myself. Can I get some response in the chat box about how long you guys have been trading for? Okay, we've got someone saying 3 months, 2 months, 1 month from Brian, 6 months from Richard. Joash is saying 1 year. I see some. Jessica is saying 1 year. Okay, I see some familiar names who are not responding. I'm assuming you guys are. I probably asked you guys that already, so yeah, that's probably why. Okay, I'm glad that it's kind of like a mixed kind of crowd. So we have a few beginners. Yubaraj is saying 1 year. So we have beginners and we have people who are a bit more like senior or advanced in the trading space. So if at any point of time you guys do have questions, do stop me. Just ask me in the chat box and I'll try my best to answer you guys. Because ultimately the point of this webinars for you guys to be, like I said, hey Albert, it's good for you to join us here. Ultimately these webinars are for you guys to like gather all this knowledge and eventually be profitable traders. So at any point of time, if you guys have any questions, just go ahead and ask me. Okay, so back to our agenda. We're gonna go with anatomy of a trade, stop loss placement strategy, and take profit strategy. So we're gonna go on with risk and lot size relationship. What is the ideal lot size and what is the ideal risk per trade? So actually, when I was doing this series, it's a 4-part series about trade management. I'm supposed to just cover stop loss placement and take profit placement. But the thing is, it's such a short topic. So I think what I want to do is kind of throw in more topics so that you guys can learn more. And next week we can go through more things. So hopefully by the end of like, I'm hoping 3 months or a few months from now, like with you guys attending all the webinars every week, you guys will be able to be profitable traders, or at least be well versed with the basics, so that you guys can work on becoming a profitable trader. Okay, so let's start with introducing the team. So for those who have been here every week, you already know who we are, but for the new ones here, we are from Everest Fortune Group. We're an award-winning research team. We have won a few awards and are also a finalist for the Best Forex and Best Equity Research for the Technical Analysts for 2019, 2022, and 2021. So we provide research to institutions, brokerages, retail people, and we do appearances on radio talk shows. So what I'm trying to say here is we're pretty versed in technical analysis and fundamentals as well. So we will be here to take care of you guys and teach you guys what we know. Like I was saying, we do a lot for webinars for brokerages. So that's why Vantage actually commissioned us to do these webinars as well. Okay, so our team comprises of our CEO, Desmond. He's the one who taught us everything we know. We have Kaylin, she's a trader. So is Angelina and myself. We are all market technicians. A little bit about myself, since I'm the one doing the webinar today. My name is Cassandra, for those who don't already know me, or you can call me Cass. I'm an investment analyst. I am a profitable trader. I manage more than 300,000 US dollars. Actually, it's more, it's closer to 500,000 US dollars now. And this is in my own personal account. I passed FTMO twice, and my specialty is basically identifying reversals, which I hope you guys will be able to do as well. So by being able to identify reversals, I've actually gotten some really sweet profits from trading. The best that I've done is actually 8% in 1 week, or was it 10% in 1 week? So I think it's about 8 to 10% in 1 week. And that's all from just catching reversals. So if you guys follow me throughout all this entire webinar, you guys will be able to know from A to Z or A to Z how I'm able to catch all these reversals, starting with our topic for today. Okay, so let's start. Let's start with an anatomy of a trade. So a trade actually consists of a few things. The first thing that I always say in all my webinars, the one very important thing is actually the entry. So for those who read, I don't know if you guys have read this book called Rich Dad Poor Dad. I think there was one chapter where he was talking about how entry is so important. He was saying how profit is made at the entry. It's not made when you get out or when you sell. Like, I mean, in that book, he was talking about property. So he was saying profit should be made at the entry. So just by buying property alone, you should get it at a very good price and then sell it at a higher price. So it works the same as in Forex or in trading. The entry is so important. If you get in the trade at a very good price, let's say you get in at like $1, for example, or $100, for example, and the price goes to 150, you made 50% of your investment as compared to getting in at like 140 and you would have only made like less than 10% of your investment. So entry is really important. As traders, we're gonna a lot of our job is identifying entries, finding entries. So for me, when I do like I try to look for reversals. Ultimately, I'm trying to look for the entries. I think reversals will get me a lot of good entries. Okay, so another thing is the stop loss. So why stop loss is so important is because without a stop loss, your account will be at risk. You want a stop loss to protect your account. Having a stop loss will protect your account from margin calls, from losing your entire account. So a stop loss is basically like a setting you put in your trade so that when you are wrong, you are kicked out of that trade. So you're basically like, I'll give an example. I'm getting in at this price at $100 and I'm hoping it goes to $150, right? So I make 50 bucks, but instead it doesn't go to 150, it drops, it goes the other way. It's actually now at $90, but so I'm actually losing 10 bucks, right? But let's say I have my stop loss at $95. So instead of losing 10 bucks, I'm only losing 5 bucks. So that's why a stop loss is so important, because a stop loss is basically there to protect you when you are wrong. Because we need to accept that with trading, you won't be correct all the time. You need to accept losses. There's no one investor in the world, I think, who has 100% profit on all their trades. Even like Warren Buffett, like I'm sure he has bad trades as well. And I read somewhere that actually the best traders or professional traders actually only get 7 out of 10 times correct. Okay, so 7 out of 10 times correct. Even that 3 times they have to be wrong, and that's why you should always have a stop loss so that you can protect your account when those 3 times happen. Okay. Okay. Another thing we should do is learn about take profit. So take profit is when you enter a trade, and like I was saying, you enter at 100 and you want to get out at 150. So you put a take profit at 150. So when the price goes to 150, it essentially kicks you out of the market, rather than it going to 150 and you didn't take profit, it actually drops back down to your entry and you actually didn't make that profit. So the other things are like break even, which is what we will be covering in the next few webinars. So this is actually the part 1 of our risk management trade management series. Part 2 will be next week. We will be covering things like break even, partial profit, trailing stop loss, and idea invalidation. So we're not going to cover all of that today. More importantly, we just need to focus on the entry, stop loss, and take profit for today. This is the most basic thing in trading. Okay, so moving on to our topic, we're going to move on to like stop loss placement strategies and take profit placement strategies. Okay. Those who are present here, I just want to know how familiar are you guys with support and resistance? Because I want to know, I need to know how familiar you guys are so that I know whether I should be doing a topic on support and resistance the next time I see you guys. I mean, not the next time, maybe next month after this 4-part series on trade management. So can you guys just let me know in the chat box how familiar, how versed are you guys with support and resistance? Because other than finding your entry, your stop loss, and your take profit, the support and resistance is actually so crucial in trading as well, because support and resistance is the thing that actually helps you find your entry, take profit, and stop loss. So can you guys just let me know if you guys are like versed in support and resistance, maybe a scale of 1 to 10? You guys can let me know in the chat box, like where are you guys at with support and resistance? Okay, Richard is saying 7, Jessica is saying 7 as well. Josh is saying 4. Okay, that's okay. I mean, if you guys are a beginner, that's okay. Even if you're not a beginner, I just have to say going through these webinars will help you refresh and help you get better at all these things anyways. Okay, so I see everyone's like fairly okay with support and resistance. Okay, so I'm just gonna briefly run through support and resistance so that you guys know. Support and resistance is basically, if I'm gonna put it in like a theoretical way, I like to imagine like you guys, I like to imagine myself as a candle. So I like to pretend I'm in a room, right? I'm in a room where there's a ceiling and there's a floor. So your resistance is called the ceiling and the floor is called the support, right? So I'm in this room and for some reason I can fly, right? So when I fly up to the ceiling, there's some kind of resistance there, and therefore I'll come back down to the bottom of that room because I'm not able to break that resistance. So I'm coming back to the support of the room, which is the floor, and I'm not able to like go underground as well because there's a floor there, there's some kind of support. So I'm just moving within the support and resistance because there is a support and resistance there. So it's the same thing with trading. Later when we go into the charts, we will see that price is constantly moving within support and resistance, or it's either making a breakout or doing a reversal at the support and resistance. And that's my specialty. My specialty is being able to catch those reversals. Like you can see how price is moving here. My job is being able to catch those reversals at those support and resistance. And after you guys follow me throughout this webinar, this series of webinars, I hope you guys will be able to catch those support and resistance as well, because I can promise you it will make you a lot of profit in trading. And that's ultimately why we're all trading, right? It's for the gains. It is for the gains, guys. We're all here to make profit. So being able to identify support and resistance is so crucial. It will help you guys a lot in getting a profitable account. Okay, so now that we roughly know what support and resistance is, let me get my pen. So just from this example alone, you can see like we're gonna enter here at this swing low for a buy, right? So you're gonna enter here for a buy, you're gonna enter here for a sell, you're gonna enter a sell at all the swing highs, and you're gonna enter a buy at all the swing lows, right? Right, so this is your entry. Remember the 3 elements that I spoke about earlier on in a trade. What do you guys need? Can you guys let me know in the chat box so I know you guys are paying attention, so that I know you guys are not lost? What were the 3 things that you need in a trade setup? Can you guys let me know? Okay, thank you, Josh. Josh saying the entry. Anything else we need in a trade? Okay, thank you, Albert. Yeah, we need entry, take profit, and one more thing we need during a trade setup. Like without these 3 things, it's really, I mean, I personally think it's really hard to be profitable without the 3 things. I use these 3 elements. Okay, thank you, Albert. Yes, a stop loss. So we're gonna need an entry, a stop loss, and a take profit, right? So because this is your entry, all the circles, all the red circles are your entry, you should now find your stop loss and your take profit. So your take profits is where you want to be taking profit. If you enter a sell here, price is going to move down and you're going to make all that profit. You're going to put your take profit slightly above the support and resistance. Okay, you need to remember this. Put your take profit slightly above or below the support and resistance. Okay, why we do this is because price is very attracted to key levels. Support and resistance are considered as key levels, and price is very attracted to these key levels. Okay, so price from this resistance, price is dropping to the support. Remember, I was saying you're stuck in a room and you're flying and you reach the ceiling. You reach the ceiling and you're trying to break the ceiling, but you can't break it because it's made out of concrete, right? So now that you realize you can't break the ceiling, you come back down to earth, which is what price is doing. It's coming back down to earth, and then now you're at the floor. So before you reach the floor, you take the profit. You take profit before you reach the floor. Why? Because you know that price is attracted to going back to the floor. But sometimes price don't go all the way to the support or the floor. So what you want to do is take your profit halfway, like above the floor, right? Or halfway on the way to the floor. That way you secure your profit. Okay. Did you guys get that? So let's say I'm buying, let's say I'm entering here for buy. Price is going up. Price is going up, right? This is price. My arrow is price. Okay, this is the resistance. Do I put my take profit above or below the resistance? Do I put the take profit A or B? Can you guys let me know in the chat box? If I'm entering for a buy here, my entry is here, and price is moving up. Can you guys just let me know if you should put your take profit above or below the resistance? Okay, thank you, Brian. Thank you, Tony. I'm so good. You guys are following. Okay, thank you, Albert. Thank you, Josh. Thank you, Jessica. Okay, you know what? This is gonna be great. We're all gonna be profitable traders because everyone is focusing and paying attention. Okay, yes, so you put it A because ultimately, ideally, your forecast is that price is going to this resistance where this goal line is, but before it reaches the resistance, you want to take profit. Okay, so we don't want to be greedy. The thing about trading, is you don't want to be greedy. This has a lot to do with trading psychology. That means it's okay if you take profit halfway as long as you're profitable. Do you know how many people are not profitable in trading? A lot of people. I think I was reading somewhere that 98% or was it 96% of retail traders are not profitable. That means there's only a 4% of retail traders are profitable. And guys, I want you guys to get to that 4%. So take the profit before it reaches that key level. It's okay. You don't have to wait for it to go all the way to the key level. You can take the profit halfway. So you put your take profit slightly below the key level that it's going to. And yep, you guys are right. You guys are following, and that's great. Okay. So now that we know where to put our take profit, let's see where we should put our stop loss. The same. Okay, because you know price is attracted to this key level, right, which is this resistance. So when it reaches this resistance, we're forecasting that price is going to reverse here, right? So what we're going to do is put our stop loss above that resistance so that when it reverses at that resistance, it doesn't trigger your stop loss and you are still in the game and you still have a chance to make some money. Okay, guys, so I hope that's clear. Let me just test you guys a bit before I move on. Okay, I'm entering here for a sell. Price is moving down. Okay, I'm gonna draw some lines. This is A, this is B, this is C, and this is D. Okay, A, B, C, D, where should I put my take profit? You're entering here for a sell. This is your entry. Okay, thank you, Richard. Okay, we've gotten an answer from Richard. We've got Tony. Anyone else? Okay, Jessica, Josh. Okay, thank you guys. You guys are right. You put your take profit here. Okay, may I know where you should put your stop loss? A, B, C, D. Where should you be placing your stop loss? Okay, you guys, I got it. This is really simple. This is really simple. Thank you, Tony. Thank you, Richard. Okay, you know what? I want to tell you guys something. Now that I'm a profitable trader, I feel like I'm allowed to say this. I feel like trading is not as hard as people make it to be. It's actually really simple. I swear, if you teach this to a 10-year-old, they would be able to get it. It's very simple. I mean, if you know that price is going this way, you want to put your stop loss to avoid where price is going. So you put it above price, right? So I think trading is very simple. And the beauty about trading is not only is it simple, it's very profitable. I mean, just think about it. If you have a 100,000 account, if you're making 10%, just 10%, that's already $10,000 a month, right? And that's just being conservative. There are a lot of people out there with millions of dollars in accounts. Okay, so I think this is a very good skill to learn. I really do encourage you guys to like take this seriously, because it will be very easy once you're used to everything, and then you'll be able to find a lot of good tricks. Okay, so stop loss placement should always be below or above the support and resistance. We got that already. And yep, we're gonna skip all of this because I want to cover more things today and hopefully get to the charts. Stop loss placement, we got it already. We kind of already covered all this. Take profit placement should be above those key levels or below those key levels, right? Oh, sorry, below the resistance and above the support. Okay, so this one is covered as well. Okay, now we're gonna move into risk and lot size relationship. Okay, I saw a few of you saying that you've been trading for a year. So you saying for 6 months, which 6 months is actually quite a significant time as well. I just want to know how well is your risk management while you're trading. Okay, just let me know from a scale of 1 to 10, like how well do you guys practice your risk management? Then I will let you guys know how important risk management is to me on a scale of 1 to 10. Okay, thanks Richard, thanks Josh, thanks Jessica. Okay, as a trader, I would have to say risk management is on scale of 1 to 10, risk management is 12 on the scale of 1 to 10. That's how important it is. Without risk management, you will not be able to scale your account up. And not only that, you will be a lot of people who don't practice risk management might even lose their account or get margin calls, or they're gonna burst their account. But if you know how to practice proper risk management, your account can go from $1,000 to 100,000. But if you don't know how to practice proper risk management, I can give you $100,000 account. I can even give you $1 million account. If you don't practice proper risk management, that account's gonna go to $1,000. You see the difference? Is so important. Risk management is so important. So let's just like go through a rough idea of risk management. Okay, what do you guys think your ideal lot size per trade should be? A, 1 to 3%, B, 5%, or C, 10%? Okay, guys, let me know in the chat box for every trade. Oh, okay, good job, Richard. Hey, Ronnie. Okay, so some of you saying A, some of you saying B. Wow. Okay, Richard, if that is what you're practicing, that's very good risk management. I've got someone who's a bit more aggressive with their trades. And okay, but most of you are answering A, which is good. Okay, so I'll give you guys context. The proper one that I can advise you guys and what I personally practice is 1 to 3%. Okay, 1 to 3% is the one that I practice. Okay, so let me tell you guys, I'll give you guys an example. If you have $100,000 account, right? You have $100,000 account. This is US dollars, whatever currency it is. Okay. If you're risking 1 to 3%, that means every trade you're only allowed to lose $1,000 to $3,000. Okay. That means to burst at 1%, to burst your entire account, you need to lose 100 times in a row. You need to lose 100 times before you lose your entire account. Okay. If you're going at 3K or 3%, you need to lose 33 times before you lose your entire account. And for 5%, you need to lose 20 times to lose your entire account. So what I'm saying is that to protect your account, you should go at 1 to 3%. 1 to 3%. I know, okay, some of you are thinking, okay, if I risk more, I'll be able to make more. Okay, I'm gonna tell you this right now. That is totally wrong. That is wrong, wrong, wrong. You don't need to risk more to make more. Like I was saying, if you know how to practice proper risk management, I can give you $1,000 and you can turn that $1,000 into $100,000. But if you don't know proper risk management, I'll give you $100,000 and you'll turn it into $1,000. Okay, so I'm gonna show you guys in a while how using just 1%, you will be able to scale your $1,000 or $100,000 to $1 million if you know how to practice proper risk management. Okay. Okay. Here's kind of like a quiz. Everyone know roulette, right? Everyone knows this game in the casino. I'm sure everyone here knows it. Okay, so there's 18 red, 18 black, and 1. Sorry, it's supposed to be green. Okay, and 1 green. Let me just change that to green. Okay, 1 green. Okay, so you have $100,000. From your odds, you know that you have a 48% chance of winning if you place it on the red or the black, right? Okay, so right now you're either gonna place it on the red or the black. Okay, so I'm gonna ask you guys again based on our first question. Are you gonna how much would you risk? Would you risk A, 1 to 3%, B, 5, or C, 10%? Can you guys let me know your answers in the chat box? Okay, I've got a lot of people saying A. Thanks, Albert. Thanks, Josh. Thanks, Jessica. Okay, a lot of people saying A. So I wouldn't risk any. Oh, okay. Wow, Richard, very conservative. Very, very conservative. Good job. Actually, I have to say, Richard, to be able to practice such conservativeness is actually, it actually takes a lot of discipline. So so Richard is saying how because the chances are below 50%, he wouldn't even take this risk. That means he's not even gonna play roulette because it's below 50% because the chances of winning is so low. So this is actually very good risk management. Okay. I think a lot of good businessmen and good investors do this. They don't take trades where they know it's too low of a chance to win. Okay, so a lot of you are saying A. Okay, now let's change the game a little. We're gonna remove oh, sorry, this is not right. It's 4 red. Okay, so we're gonna remove a lot of the colors. We're gonna remove a lot of the reds. Okay, so right now at this point of time, you have a 86% chance of, sorry, let me just change this number. It's 32 blacks. Okay, you have an 86% chance of winning if you place on one of the blacks. So now that your chances of winning has increased, can you guys let me know if you're gonna go A, B, or C? How much risk are you gonna take now? Well, okay. Anyone else? Albert is saying C. Anyone else? Josh is saying B. George saying, Jessica is saying B as well. Okay. There's no correct answer to this, because ultimately how much you want to risk is entirely up to you. But my job here is just to tell you guys that you don't have to risk a lot to make a lot. You can risk 1 to 3% and make 10%, but that's just trading. I don't know about roulette, okay? Okay, so what we can agree here is that when you guys see that you have a higher chance of winning, you tend to risk more, right? That's what we can all agree on. So what I can say to you guys is you don't have to risk more. You can still risk that 1 to 3%, okay? That means when you find a trade setup and you see one that you're not very confident of, like you see one that you're kind of confident of, but not so you can take 1% on that trade. But one that where all the stars align, all the indicators are saying that it's a buy, everything's saying it's a buy, the news is saying the buy, everyone, your cousin, your uncle, your grandma, technical analysis, fundamental analysis is saying a buy, you can take 3%. Okay, so what I'm trying to say is the range should still always be at 1 to 3%. It should never be above 1 to 3%. I mean, if you want to go more, that's entirely up to you, but as an advice and as someone who has managed to grow my account from a very small account, I managed to grow it to a very large account. I can tell you guys that 1 to 3% is all you need. You don't need anything more than 1 to 3%. Okay, so it doesn't matter how much chance of winning, you should still stay below 3%. If now your chances of winning is higher, just go 3%. If it's lower, just go 1%. Even if at 1% you still feel uncomfortable, you can go 0.5%. Okay, but what I'm saying is just stick to 1 to 3%. Okay. Okay, next, so what is the ideal lot size and what is the ideal risk per trade? Okay, we've already achieved that it should be 1 to 3%. If you have a 50,000 account, let's change. If you have a 50,000 account, your risk should be at 1%, it should be 500, at 2%, it should be 1,000, and 3%, it should be 1,005. So your risk to account, it depends on where you place your stop loss and where you place your take profit doesn't matter. It's actually where you place your stop loss. So if you place your stop loss 50 pips away from your entry, that means you should take whatever you're risking, 1%, 2%, or 3%, and divide that by 50 pips, and that is how much you should be risking. Okay, I'll give you an example. That means that for every 1 pip, let's say you take 500, you divide by 50, that's 10, right? 500 divided by 50 is 10. That means you should be going $10 per pip. Okay, $10 per pip. That means for every pip that moves for this pair, for every pip that moves, you're losing or winning $10. So for it to move 50 pips to your stop loss, you'll be losing $500. And that's how you should be calculating your lot sizes. It should be based on your stop loss. That means when you enter a trade, you should know how many pips are your stop loss. Is your stop loss, like from your entry to your stop loss, you need to know how many pips, and you take your the amount of risk that you're taking. 1% is 500, and you divide that by your pips, and whatever answer you get should be the amount, your lot size. Okay, that's one way to calculate lot size, and that's very important. Okay, I have to say that this does take a while, a bit of practice to get, because sometimes it will take a while, because every time you enter a trade, your stop loss will be different, and therefore the pips, the number of pips will be different. Okay. Okay, this is all okay. I want to move on to the live chart so that we can try to look for a setup and we can try to apply everything that we learn. Before I move on to the live charts, can do you guys have any questions? I'll give you guys like 2 to 3 minutes to ask questions so that we don't waste too much time, and we can go into the live charts, and I can show you guys how to look for trades. I can show you guys how to find setups, and then how to apply the entry, stop loss, take profit, and how to put in your risk management, and how to find your lot sizes. So does anyone have any questions at this point of time? I'll give you guys a bit of time. Okay. Yeah, Richard, I find that you are very conservative just from your answers alone. So Richard is asking, do you have any advice for people who are too risk adverse? I find myself not putting on a trade because I don't want to risk my account. Okay. I think you don't want to be too conservative as well, because that way you're going to end up not taking any trades. And then there will be trades that you don't take that might end up being correct. So what I can advise you do is, instead of not taking any trades, go smaller risk. So instead of risking 1%, you can risk 0.5%, you can risk 0.2% or 0.3%. Just go a really small risk and then take it. That way you are actually in the trade and you're not risking too much. So let's say at 100,000 account, you're risking 0.5%. That's only like $500, right? Because 1% is 1,000, so 0.5 is 500, or maybe 0.2%, which is $200. You're only risking $200, but ultimately you're taking the trade and you will be able to find out if your strategy is working, if you can be a profitable trader and whatnot. Okay, so I do encourage you to not be too conservative. If not, you're going to end up not taking any trades. But I think there's pros and cons to this. If you are very conservative, it also means that you're only taking very good trades, which is also a good way to grow your account. But not too conservative in a way where you don't take any trades at all. Then that means you're not gonna even be a trader, because you're not taking any trades, right? So just go smaller lot size. Yeah, do find the balance. I can suggest you reading some trading psychology books. It really helps a lot. You just need to know that ultimately with trading, I want you to be safe. I want you to be risk adverse, but not too risk adverse, because ultimately with trading, you are risking one thing to gain something else. But without risking, you will not be able to gain anything. And that's just the same with everything in life. You do have to risk with everything in life. I mean, even just going to the store to get like groceries, you need to like maybe cross the road, right? And even crossing the road has risk. Like you might get hit by a car, you might get like whatever it is, but everything you do in life has risk, so you do have to take some risks. But the amount of risk, thank goodness, the amount of risk you take in trading is ultimately up to you. You can go really small lot sizes. Yeah, okay. So Richard is saying he read Mark Douglas's Trading in a Zone. I do agree that it's a good book. I've read that as well. I do recommend you guys reading that, because we want everyone to be profitable here. I want you guys to like, so I do webinars for others, others as well, and I love it when like after months of attending my webinar, they're just like, thank you, we're profitable, blah blah blah, whatever it is. So I hope you guys can become profitable as well. Okay, we've got requests already from Ronnie. Euro USD. So yeah, if you guys don't have questions, we're gonna head over to the live chart so that we can start charting. Just give me a sec. Okay, can you guys see my charts? This is the most important thing right now. Can you guys see my charts? Okay, that's great. Okay, Euro USD. Ronnie, you're in luck. The charts is just at Euro USD. Okay, I do not know who drew this. I do not know who drew this, but it looks like there's already a setup here. Okay, we're gonna remove all of this so that I can show you guys how we find our setups. Okay, the first thing I usually do is look for a trend, right? You want to know where the market is going, whether it's going up or down. So just from one look from the charts, do you guys see that it's on an uptrend or a downtrend? Can you guys let me know? We don't have much time, so the faster I get some response from you guys, the faster we can move on to the next thing. Do you guys see an uptrend or downtrend? Richard is saying head and shoulder. I don't see the head and shoulder actually. Okay, so Albert is saying uptrend. Harina. Oh, hey, Harina. Hello, hello. I haven't seen you in a while. Okay, Harina is saying a downtrend. Someone saying it's an uptrend. Okay, I do see a downtrend. I'm just gonna quickly go through this because we don't have much time. So I do see that it's on a downtrend. Do you guys see this downtrend? It is on a downtrend for me. I mean, if you guys see an uptrend, do let me know. I don't see an uptrend. If it was an uptrend, I won't be able to connect it somewhere. But overall, it looks like a downtrend to me. Okay, so now that we have found our trend, oh, I'm sorry. Now that we have found our trend, now we can find our bias. So right now we're biased that it is on a downside. That means ultimately when I find out it's on a downtrend, what I want to do is find an entry for a sell because I want to follow the wave. I don't want to go against the wave, okay? I do not want to go against the wave. So because I'm biased that it's on a downtrend, I now want to find an entry for a sell. So what I want to do now is identify support and resistance. Remember I was saying we are the candle, there is a ceiling and there is a floor, okay? So the easiest way to identify this ceiling and this floor is to find the last swing high and swing low. So there's a swing high here, there's a swing low here, there's another like kind of mini tiny swing low here. There's a lot of swing highs, swing lows here. Okay, so that's how you identify support and resistance. So we're gonna pull out our horizontal ray so we can plot the support and resistance. So there's a resistance right here. And I do see a support right here. That's a very obvious one. And maybe the ones that are not so obvious are the ones that are in between. I see a support here. I don't really love this support because price actually cut through this support. When price cuts through the support or resistance, it means it's saying to me that price is not respecting that support and resistance. That means the support and resistance is not strong anymore. So like I was saying, you are the candle and you're stuck in a room, right? So you reach the resistance and you're trying to knock on the resistance because you want to climb out of the room, right? But that part of the wall, the ceiling that you are knocking is so hard. It's made out of concrete or it's made out of platinum or titanium or whatever it is. It's so hard, but it doesn't mean that other parts of the ceiling is not made out of like sugar or like paper or like other like really fragile material. So if you can see in the past, every time price came to this support, it tends to like bounce back up. Do you guys see that it bounces back up? But this one time it came here, it actually broke the support. That means this part is where the support has become fragile. Price is no longer respecting the support and it broke through. So you can see that it broke through. That means that this support has been weakened or is weak already. So we want to identify support and resistance, and then we secondly want to measure the strength of the support and resistance. Why we need to measure the strength of the support and resistance is so that we know that next time if price comes back to this resistance, is it gonna break through or is it gonna do a reversal? So we don't know that until we measure the strength of the support and resistance. And how we measure support and resistance is actually not covered in the topic today. It's actually part of the Fibonacci series. I know there are a lot of familiar names here, like a lot of you who attend my webinar every week. So you guys are already versed with support and resistance. But are you guys okay if we cover support and resistance again, because there are a lot of beginners and new joiners? So just let me know in the chat box if you guys are okay if I cover support and resistance again. Not today, not next week or the coming month. Probably in the next 2 months, we will be covering support resistance and Fibonacci. Okay, so everyone's okay if we redo Fibonacci again. So how we identify strength of a support resistance is we back it with Fibonacci. For those who are always here with my webinar, you already know how to use Fibonacci, but those who don't, we will cover it one day. So right now I'm not really going to explain. I'm just going to go really fast to find it because we don't have a lot of time. So this is a projection. I see a 161 projection. So there is a Fibonacci level that lines up with this first resistance that is kind of indicating to me that this is a significant level. The more significant the level is, the strongest the resistance is. And the stronger the resistance is, it means that I am more biased that price will do a reversal rather than breakout, okay? Because it is strong and price will not be able to break that concrete resistance, right? It will only be able to break the resistance if it's fragile. And right now, Fibonacci is lining up there, which is signifying that there's some kind of strength there, okay? Or some kind of significant level there. So right now, just based on the Fibonacci lining up there, I am biased that price is going to reverse from here. Okay, I'm biased that price is going to reverse from here. So price is going to reverse from here. That means this is my entry for a sell or a buy. Can you guys let me know in the chat box just really quickly? Is this an entry? Okay, thank you, Richard. Okay, this is an entry for a sell. Thank you, Albert. Thank you, Joash. Thank you, Jessica. This is an entry for a sell. I'm going to place my stop loss just slightly above so that if at any point price does break out, I'm going to be wrong, and I'm going to be wrong fast. Me being wrong fast means I don't lose a lot of money, okay? That's the most important thing. We want to protect our account, okay? So this is going to be my stop loss. Another way to find your stop loss is to put it above the last resistance. So there is a resistance here. There's a swing low here, therefore there's a resistance there. You can put your stop loss just slightly above that resistance if you want. You can put your stop loss here just slightly above that resistance, that green resistance. So you can put your stop loss there. That's one way you can find your stop loss placement. Okay, and your take profit will be at the next key zone, your next support. Okay, remember I said price is always attracted to key levels. Key levels equals to support and resistance, or trend line support and resistance. It is very attracted to support and resistance. Right now it's at a resistance. I'm biased that it's not going to break, instead it's going to do reversal. So when it does the reversal, it's going to be attracted to the next support level. You can say the support level is here, but I do see another support level, a tiny support level here. Right? I see that support level. Support, okay? So one thing you can do is play it until this support. If not, play it to this second support, okay? I'm gonna change this to first support and this to second support and this one to third support. That's why some people, when they trade, they have take profit 1, take profit 2, and take profit 3, okay? So if you're being very conservative, you can go in for the sell, and then you can take your profit here at take profit at first support. But remember what we were saying earlier, the strategy is to put your take profit slightly above the key levels. So your take profit is going to be slightly above the key level. Your stop loss is going to be take profit. It's going to be slightly above your key level. Your stop loss, okay, honestly, when I trade, I don't put my stop loss that far up. I put it like just slightly above. So you guys can see now that we've got our entry, we've got our sell entry, we've got our take profit, and we've got our stop loss. Okay, now let's calculate the risk management, like how much we're risking. So I'm going to use this tool. It's really cool. You can adjust it, you can move it to your entry and your take profit and your stop loss. So you see this 3.146, ultimately you're risking 1 to 3.146, 1 to 3.146. That means if you have a $100,000 account, you're risking $1,000 to make $3,460. So you guys see how you don't have to risk a lot to make a lot. ultimately what you want to do is find very good setups. You want to find good setups where there are very good risk to reward, that gives you very good risk to reward trades. Okay, so you're risking $1,000 to make $3,460. Okay, you guys see that? And if you move this down, because this is just take profit 1, right? Let's say you move it down to take profit 2, which is somewhere around here, you're risking $1,000 to make $6,890. You're risking 1 to 6.89. Okay, if you move it to all the way down, if you're very like ambitious and you're aiming really far. Okay, good question, Richard. So one way, Richard is asking, do you move your stop loss to break even at any stage? Okay, one way to play the trade is when it reaches the first take profit and you still don't want to get out. You want to play it until the second take profit. You can move your stop loss to entry. That way it becomes a risk-free trade. Hey, Yubaraj, I'm a day trader, so I usually look at the 1 hour to the 4 hours. I don't really like looking at 4 hours anymore because I find that sometimes when there's no volatility, trades do take a few days to play out. Sometimes it takes 2 to 3 days to play out on the 4 hour charts, but I know on the 1 hour charts, most of the time it plays out within the day. Okay, so I'm a day trader. This is how I do it. So you guys can see from this setup how risk management can actually grow your account. So you think about it, you have 100,000 account, right? You get this trade right. Let's say you're aiming for the moon. You get this trade right. Let's just not aim for the moon. Let's just go for the second take profit. You aim for the moon, aim for second take profit, you make 7%. You make 7%. Your account is now $107,000. The next time you trade, you risk 1% and then you make another 7%. So ultimately your account will be like 1,114. You see, just from 2 trades alone, in 2 trades alone, you have made $14,000. This is why you don't need to risk so much. You can risk the minimal, I think one of my best trades is when I risk basically close to nothing. I risk nothing to make 10%. Yeah, that was my best trade, to be honest. I got my entry here right at the reversal and it shot down and it made me 10%. Okay, so this is how you guys can play it. Okay, Richard is asking, is there a strategy to handpick the best risk to profit setups? Yes, there is a strategy. This is the strategy actually, Richard. The strategy is to identify the support and resistance, wait for price to go to one of the support and resistance, and then enter at the support and resistance at a reversal. So even if price does a breakout, because your stop loss is so tight and because you're practicing proper risk management, the most you can lose is 1%, right? Because like my strategy is to always only risk 1%. The most I can lose is 1%. But if I get it correct, I make 7% or 10% or 4%. That means if I'm doing 1 to 10, my risk reward is 1 to 10%. I can get it wrong 10 times and I can get it right 1 time, and I will still break even and I would still not lose any money. So you see how beautiful this strategy is? Yep, that's right. Because you're selling high, you get a higher range to trade into your, yep, that's right. The closer, the better your entry is, the better your lot sizes will be, okay? Harena's asking, what about liquidity grab? How to avoid it? It stretches your stop loss before it goes to the buys. Oh, okay, yeah, that's true, Harena. Okay, so one thing about my strategy is that a lot of times, because my stop loss is so close, I get stopped out before it goes the correct direction. That means I end up being correct. But it actually just wicks me out before it goes to the correct direction. So one way to actually avoid this problem is to just move your stop loss higher. You move your stop loss higher, that means your lot sizes need to change. You need to go to a smaller lot sizes. ultimately you're still risking 1%, right? But your lot sizes is smaller. That means because you're moving your stop loss higher, you're risking 1%. So maybe you're only making like 2%. So your risk to reward ratio wouldn't be amazing, but at least your trade is safer. So it depends on how you want to play the trade. It depends on the strategy you want to use. I prefer, like, I personally, I like to go for 1 to 5 kind of trades, like 1% to 5%. But if you want your stop loss to have a bigger breathing space, that means your chances of getting stopped out is lesser. That means you have, most of the time, you don't have to, but most of the time it means you're going for smaller reward as well. Okay, because there's always a price to pay with everything. Okay, so that's how I find my setup for trades. That's how we look for our stop loss, our entry, and our take profit. And that's how we get in trade, and that's how we grow account. Okay, so I've run out of time with you guys. I hope I see you guys next week. Next week we'll do part 2 of trade management, and hopefully we get to learn something next week. And I really hope you guys do follow me. I just have to say, I do have webinars for another group, and those who have followed me from the first webinar all the way to the end, their trading has improved immensely. So I hope you guys will be able to follow me as well. I'll see you guys next week. We'll do part 2 of trade management. We'll do the other things like the idea invalidation, take partial profit, break even, and all those other stuff. Okay, so I'll see you guys next week. Thanks for attending my webinar. Thanks, Albert. Thanks, Herna. Thanks, Richard. Thanks, Joyce. Thanks, Jessica. Thanks, Annie. Thanks, Angie. I'll see you guys next week. Thanks, Brian. Thanks, Tony. Thanks, Abraham. Okay, I'll see you guys next week. Okay, bye.